With only hours left until this major event, we see today closing with a candle of indecision at a time when liquidity just spiked as the Fed just quietly ended QT, and you want to pay attention to these key levels. Now, when we come over and look at the fear and greed index, right now we're sitting at 25. We are still in extreme fear. However, we're just barely on the edge. Now, when we look at how the indices fared across the board today, the Dow was up 185 points. The Nasdaq was up 137 points. S&P 500 up 16 points, with the Russell 2000 being down 0.49. So only one of the four indices was actually in the red today. But then we come over and we look at advancing issues versus declining. Notice today we had 51.5% of issues actually declining on the day, even though a majority of the indices were in the green. Then we come over and look at how the sectors performed across the board. Technology was the leader out there, but we actually had more sectors in the red today. And one of the things we were talking about today on the live stream was pay attention to the SPY versus RSP. RSP is going to be the equal weight S&P 500. Well, we have the SPY actually up 0.17%. But then as we come over and we look at the RSP, the equal weight S&P 500 was actually down 0.16. So this means it's really the heavy weighting stocks inside of the S&P that actually cause the S&P to be green for the day. However, if we come over and look at the volatility index, another red day out here for the VIX. VIX being down 3.6%. But something that really had me scratching my head today was when we come over and look at the dollar index. Today, the dollar index was down 5 cents. And we've been talking about this in previous videos. We have the potential for a double top. Top number one, top number two. All we got to do is see the dollar break below 98.980. Then that would validate this double top pattern, and that would have lower prices out there for the dollar index. And keep in mind, with only 7 days and 21 hours left until the next FOMC meeting, and the market priced in an 89% chance that the Fed will be cutting rates, we would actually think that lowering rates would put more pressure out here on the dollar index. Well, with the dollar index going down, normally we're going to see gold just rocketing to the moon. And we've been watching this ABC pattern try to play out. If we start measuring the move from right down here, we go A to B, B to C, and we project right up here at 43.9. Well, notice yesterday we had quite the selling tail on top of this candle. And then early on today, we came pushing down, but now we formed a hammer candle. And I would say that I would be surprised by this. However, I'm not. Quite often, we'll see these two candles in conjunction as we see the market starting to pull back just a bit. And then we couple that with the fact that the US Fed ends QT with 13.5 billion liquidity pump. And that actually caused the crypto markets to rally. Now, when I bring over this chart real quick, notice why is the Fed injecting so much liquidity into the market? Well, I think any common sense person would know the market is on borrowed time. It's only a matter of time before the house of cards come crumbling down. So if we actually come over and look at Bitcoin at a time when the Fed's pumping in liquidity in the markets, look at Bitcoin. We had this little double bottom pattern, bottom one, bottom two, and really more of a higher low, not really a double bottom. I misspoke there, but kind of a higher low. So this could actually be an ABC pattern on the way up. However, I do want to caution you guys, if Bitcoin just ends up consolidating down here and we get the MACD indicator a chance to get back towards the zero line, watch out, that could be nothing more than a recharge point for another leg lower in this market. Now, if we come over and look at the SPY real quick, notice we talked about we had a candle of indecision, wick on the top, wick on the bottom of this candle. And let's not forget, last week we had several gaps which still have not been filled in this market. Now today, we did push up a little bit higher. So if you've been tracking using this Fibonacci retracement tool, notice one of the key levels we've been talking about is all the way down here at the 38% retracement, also right near a high volume node on the composite profile. Well, we're nowhere near that level, but if we're able to go down there, that would be enough to fill two of these gaps on this move up. And quite often the S&P will actually retrace to the 50% level. Well, if we drop down, we look at the 4-hour chart, notice we had that push up, a simple consolidation up around this high. And a lot of traders would say, watch out, this will be a bull flag pattern likely to resolve to the upside. And it very well could. However, what happens quite often with a bull flag pattern, we'll see this consolidation take place. We'll see a quick move down to try to invalidate the pattern, get everybody caught off sides, and then rip it on up. That way it wrecked the initial longs that jumped the pattern early, and then it caused the sellers to jump in, looking for the market to essentially go down lower. Now, let me know in the comment section down below. Do you think this will actually play out as a bull flag pattern? Now, we come over and look at the SPY out here on the 30-minute chart. Today, we had a D as in dog shaped profile, and something I warned about in yesterday's video. I said, watch out if we continue to consolidate up here at these levels and the MACD indicator gets towards the zero line. Watch out, that could be nothing more than a recharge point for another leg higher in this market. Speaking of another leg higher in this market, don't get caught off sides because Apex sale ends tonight, 80% off. Use code Mike because tomorrow the price is likely going to be substantially higher. Now we come over and look at the futures markets real quick. What do we have going on? Well, on the 4-hour chart, the S&P still has this untested point of control above us at 68.73 and a quarter. And we just had this consolidation take place. Now, where I will be very excited about this is if we can get below 68.05, I think it opens the door towards this high volume node at about 67.70 or so. And then we get below that. We'll see if we can come into this minus development area or even all the way down towards the weekly untested point of control at 623 and a quarter. Now, as we come over and look at the daily profiles on the 30-minute chart, something I want to pay attention to. Notice today we had this large down candle, and we've talked about this across many videos. Whenever we see a large candle and we get above 50% of that candle, quite often we'll end up undoing that entire candle. Now, I say quite often, not every single time. So we'll see if this time plays out or not. So tonight, if we really start getting back near these two swing highs right up in here, we'll call it 68.51. My attention is going to turn back towards the highs from today. However, if we start breaking above that, not only will we be above 68.51 value area high, I look for the highs from today, but then anything above and beyond that, that's where we want to focus on that weekly point of control at 68.73. Now, something that's going to be very important for tomorrow, which we only have hours left, and that is going to be, we're going to get the ADP non-farm employment change. And the reason why I say this is so important, because on Friday, we are not going to be getting any labor data. Normally on the first Friday of the month, we'll get the NFP report, which we're not going to get. However, maybe the ADP report will shed some light on how strong or how weak this labor market is. We can see right now, they are forecasting a growth of only 5,000 jobs. So what happens if we actually end up missing? Will send stocks screaming lower, or will traders get so excited that Jay Powell and the Fed are going to have to aggressively cut rates that bad news could actually be good news for stocks? And then let's not forget, tomorrow at 10 a.m., we also have ISM numbers coming out. Now, when we come over and look at the QQQs, when we look at this chart, we can clearly see we are much higher than we have been where we had that Fibonacci retracement drawn out. So now what I want to do is I want to go ahead and grab that and pull that up here just a bit. And as we're above this, now look at where the 38% retracement is. If we continue to go up a little bit higher, then we're going to have to grab this Fibonacci tool and keep going on up. But I do want to caution you guys real quick. Right now, we are still below this swing high here. So for all intents and purposes, we still have a case where we could be making lower highs, and we'll see if we end up coming down, forming a higher low, and then maybe start to see that trend firm up, and maybe see that trend start to reverse and maybe run towards all-time highs. MACD indicator on the daily chart is crossed to the upside. We look at the 4-hour chart, MACD indicator still looks extremely strong at this moment. But then as we come over, look at the 30-minute chart, look at the MACD indicator, basically flatlined down here. And notice today we had a gap up. The markets came down trying to fill the gap. However, we were unable to completely fill that gap today. Now, as we come over, look at the GEX levels real quick, notice we have a lot of gamma exposure right up here, right around 630 or so. And if we look at where we're trading at right now, we're trading at right around 622. Well, if we look at where 633 is, that would now be enough to go ahead and fill the gap above us. So we got to ask ourselves this question. Are we going to try to make it up there? And here will be a line in the sand for me. If we start getting back below 620, then that really opens the door that where the market can start trying to pull price back down towards some of these lower gamma exposure levels, like right down here, right around 590, or before we get there, back right around 600. So let's keep an eye on that 620 price point. Right now, we closed at 622. So tomorrow, if we start coming down below that, that's where I want to focus on today's gap, potentially getting filled. And then maybe even this gap from last week, right here, down around 608.77. Now, we come over and we look at the futures markets real quick. Notice today, unlike the S&P 500, where it did not hit the point of control, the Nasdaq was able to take out its point of control. And we come over and start looking on the daily profiles on the 30-minute chart. What do we have? Well, we closed a lot closer towards the top of the range. And if you look at the wicks on this candle, basically came right up to the top of the candle body, not the entire candle wick of that nasty down candle that we saw and we traded during the live stream today. So I want to look, can we break back above this area? Now, if we do start breaking above the highs from today, what are we really looking for? Well, I'd want to go ahead and grab a Fibonacci retracement tool from all-time highs down here towards the lows. And the next area I'd really want to focus on would be up here right around the 78.6 Fibonacci retracement level, 25,868.5. Now, we come back over here real quick and look at this daily profile. In the event that tonight or tomorrow we break above value area high, we start coming down, I want to target the point of control. I want to target value area low. I want to retarget the lows of today. And then from that point on, I'd really want to refer back over here to the weekly volume profile charts and see, can we come down and maybe get into this high volume node on the weekly profile from last week, somewhere around 25,084. Below that, I would turn my attentions right here towards that point of control. And regardless if you want that point of control to get hit or not, do me a favor, smash the like button down below, turn on the bell notifications. And if you want to make sure your next payout with Apex Trader funding does not get denied, then you want to make sure you understand these rules correctly by watching this video right here.